Good morning. What's up? How we doing? We just rolled over into a new 5-minute bar. You're looking at 5-minute NQ. We are testing the high, barely taking out the wick high of 1819 with 29 here. A couple of bars later, we're still testing that high, looking like we could see a double top. Now, is a double top a tradable pattern in this instance? For me, the answer is no. For me, the answer is I'm waiting to see what we get on 31. We'll see if we end up with a trading range between the highs of bar 18, 19, 29, 30 and the lows of 24 and 25, which that would be, what, about a 70 point wide range, maybe 80 point wide range, which we could certainly work in. The ATR is 37, so it's been relatively low, at least late morning here. So we'll see. What's up, guys? How we doing? Good morning, Stu, Ro, JJ. What's up, Brandon? Tina, Big E. How we doing, guys? How we doing? Good to see everybody. All right. Rovio, Jerome, how are we? Come on in. Okay. So, bar 31, if we can close above the wick high of 29, still we're probably looking at a trading range here until we could get bar 32 as another consecutive bull body. So, this market has some work to do to convince me that we're heading up toward 29K. What do you guys think? Are we going to see 30,000? 30,000 before we see 27,000 again? You know, obviously we had quite the gap up here when we opened up last night. Faded that a little bit into the open and now reclaimed all that and then some. So as far as head to higher to 29, you know, there's really nothing, at least not too much in the way. But again, that doesn't just mean I'm going to slap it long and hope for 200 points. I got to watch this thing, trade price action, and do the best job we possibly can here. So, again, contextually speaking, obviously all day we had this huge bull move. Okay, which was tremendous, by the way. And then we get this. And this has been the case here for, it's been over an hour now, so we'll see here. We'll see. My head is being banged against the wall over and over again, range, until it's very obviously no longer that. But until then, I have to assume range, because we know, man, we know 80%. 80% of these breakout attempts in a sideways range are going to fail. Johnny from the UK, what's up, brother? How we doing? Big Javaz, what's up, brother? All right. Okay, minute 7 out till the close up of 31. Brando, what's up, brother? Okay, 31 is going to roll over into 32. Inside close, the wick high at 29 here on 31. The bulls, you know it's coming. When you see this sideways range action, the hesitation here around that previous high, which was 18, 19, bar 18, bar 19, right? You know the hesitation's coming. So if the bulls want to take this guy higher, I'm very open to it, but I'm going to need to see some sort of move of confidence, which basically means a couple consecutive clean bull bodies above the highs, which is now 29.31 rather than 18 and 19. But that high of bar 18 and bar 19 are, of course, the looks that 29, 30, 31 are seeing. Okay, we're about halfway through bar 32 here. And, I'll tell you what, if it's really, really clean, I'm open to it, but it would be the early trade. I would classify it as the early trade, which means what as far as probability? Can any of you Tomb guys tell me in the chat, what does the early trade mean for probability? Who's got it first? Yeah, Brando, lower probability. Manuel, close. Close. It's not particularly, or I should say it's not necessarily low probability. It's just lower than I would, prefer to see out of a regular. Like, for example, who took bar 11? How many of you guys got long on the close of bar 11 here this morning? Something went off in your brain when 11 closed, didn't it? You said, that's a ram trade, isn't it? I should probably get long on the close of 11. Anybody? See, those are the ones that are so simple to recognize. That, of course, this is not, the entire wrench action method, but it's certainly one of the most simple to recognize and one of the most repeatable. Typically, that kind of set up the close of 11, even the close of 12, man, if you could get a fill. Those are the ones people usually start learning first, I've noticed. Just don't skip context. You skip context, you're losing sight of everything. Come on, 32, man. 38 seconds out here until bar 32 closes up. And I'm looking for a much cleaner bull body out of 32 than what we're currently getting. We're sitting at a doji, and I'm not happy about it. Well, it would certainly need to be clean. Let's see. 10 seconds. Yeah, it tried to clean up there last second. You guys see that? Fading right back now. All right, we're probably going to close inside 31. At least close to it. Yeah, inside the wick high of 31 here on 32. On to bar 33. See what we get. Devaz, 3K profit on the close of 11, my man. Tremendous. Hustler's Fuel said about the early trade. Low probability, higher potential for better reward to risk. Edge says lower probability, higher R. Well, higher reward to risk potential. Not necessarily higher R, right? But I know what you mean. Man, some of you guys are fucking on it. We love it. We love it. You know that bulls are hesitating here. I think this is a lot less about the bears stepping in and causing a problem, and a lot more of the buying pressure is easing as we push into these highs, because you know they're nervous to take it higher. Cotton, I'm not sure. What you're looking at here, this is NinjaTrader. Okay, and I plug in Apex to NinjaTrader. You can either use the Rhythmic connection or the Tradeovate connection. So I gotta tell you, you know, in light of what we've seen all day here, and even though we have a sideways range, here, let me zoom out of here. Even though we have the potential for this, right, which is what I'm concerned with, that the bear's gonna fade us back in. After all this, and then this clearly spending a lot of time drifting in the upper third, trying to break higher, but being hesitant, but trying to break higher, just... Let me help you out here after years of experience. Getting short here, if it works, hey, it works, great. But in the context of this look, I'm not looking to get short here, at least not yet. Okay, my mind is on, okay, let's see if the bulls can push this thing higher, and then I'd be interested in a long continuation if they fade us back into the range. Maybe I look for long trades inside of the range. As far as getting short here, before I get any kind of short setup, it's a very tall order because you're basically using the wick high of bar 32 to manage risk, and you're looking at a pretty low probability, but granted, pretty high reward to risk, but the risk is like 12 points with an ATR of 34, and the probability isn't even really good enough, in my opinion, to justify that because you're going against the positive drift. Which, what was your mistake? You ignored context completely. Now, there's a line, as far as context is concerned, where, you know, you might see a situation like this where I would short and use a wick high, but there's going to be less positive drift when I'm doing that. It's going to be much more of an actual sideways range with, if not a little bit of negative drift in the range. That makes sense? This has a lot of positive drift, and going against that, I'll tell you what, is a very, very tough way to make a living in this industry. I'm not the guy that's gonna say, you know, just figure out the trend and the trend is your friend. It's like, well, when it's trending, but the problem with that statement is, when I heard that way back in the day, I went into every day looking for the trend. The problem is 80% of the time the market's ranging. There is no trend. Okay, so if you just start with context, it's gonna make your life so much easier. And you see here, context was bull trend into potential sideways range, but maintaining positive drift, especially since bar 29. It didn't really reject. We're just melting in this upper third, trying to get away without much bear rejection at all. So getting short here is a very tall order, at least for me. If you get short and it dumps 8,000 points, I'm happy for you. I love it. But it's not a repeatable setup for me. So watching bar 34. And we know that this is here, so let's get rid of that. All right, keeping an eye on 34 here. Let's see what the bulls got. By the way, some of you guys who are brand new to trading, let me save you about 3 years, okay? You ready? You can take this or don't. Doesn't change my life, but I hope you do, because I want you to win. Everyone comes into this thinking that contrarian mindset, which being a contrarian makes all the sense in the world in a trading range as long as you can make sense of the risk you're putting on the range scalps. Here's the problem with being, because I did the exact same thing that you're probably thinking right now, and it fucked me up. Everyone comes into trading day 4 and they look at this and they say, wow, okay, how many points has that gone? Holy shit, that's gone 500 points. That's gone too far, man. I should probably get short. This thing's gonna come back to the mean. Look, this is a trend. Yeah, sure, there's potential for a range between bar 19 and where we currently are, but realistically, we had a huge trend here, and we may just continue that trend. Okay, getting short, there's no way to manage your risk. It's all open space above. There's no price action-based stop. We're basically at the high of day. How are you going to manage risk? It's going to be arbitrary, and you're trying to time it. Just pluck it perfectly. And what you're looking at is a huge, now listen very carefully, I'm dead serious. Theoretically, you're looking at a huge reward to risk, because maybe you place your stop arbitrarily 40 points higher, and you're looking at this, you're like, man, if we return to the mean, that's 250 points. Theoretically. With a low probability. Does that make it a bad trade mathematically? Not necessarily. Here's the problem. Listen to me very carefully. You are not holding it 250 points, big dog. You're taking it after 26 because you're like, green is green, man. I gotta book up my money, man. That's rent money. Fuck yeah. No, dude. Stop. The math is so messed up in that situation. It's so bad. But that's how everyone trades in the early days, and you get run over. Even if you don't get run over in the first 3 weeks, you think you're God because you picked the top twice. You're like, man, I've got it figured out. Well, you're going to get run over, and I'm telling you, it's going to be extraordinarily painful, and I'm trying to save you from doing that. Okay, so just start with context. Everything trickles down from that. The context today is bull trend with potential for a sideways range, but overall, bull trend. We may see this turn back into a range, continue the bull trend, soft bull channel, but as far as a bear look, there just isn't one right now. Now, that doesn't mean there's not people getting short, of course, but we're day traders. We have to, find what has reasonable expected value and then put it on. All right, 52 seconds out. How many of you have done that before, by the way? I'll raise my hand real fucking high. You see a big bull trend and you short it. I used to do that all the time. With big bear trends, I used to do that all the time. I'd say, man, that's gone really far. It looks like it's starting to slow down. I'm probably going to get long. It's that contrarian mindset. It sounds really smart, but it's a trend. It's not a range. as a day trader, by the way, I have to wait on 34 because this bar is outsized in comparison to 31, 32, and 33, and it's the first bar really to close outside the range, so I'm going to watch 35. My contrarian mindset now look, here, listen to me, okay? I want to be very clear. As an investor, you got to step up to the plate. If you believe in a company and it's down 60%, like at some point you're like, this is a bargain. I should probably buy this and hold it forever and never sell it. That's different. We're not talking about that. We're talking about day trading, okay? I agree with you. In the context of day trading, I only have a contrarian mindset when it's a range context. The intraday context, the tier 1 of RAM is range. When it's a trend, I'm looking for any reason to get, if it's a bull trend, long. If it's a bear trend, I'm looking for any logical reason to get short. That's it. That's it. You will never see me say, hey, I'm taking a RAM trade and short bar 34. And just place my stop up in space. So I'm waiting on 35 to see, hey, can it get a nice clean bull push? Because this is what I was concerned about, because 34 is the first bar really closing outside of the range, and it's outsized, not in comparison to the average true range, but in comparison to bar 31, 32, 33. Javaz says me, Z says me, Kevin says yup, Sim says yup, Ray used to, not anymore, good. Z lots of times, Brando says if you don't raise your hand, you're lying. Oh, Todd says unfortunately been in one for the past 40 minutes. Oh man. Taz, both hands, big dog. Yep. We've all done it. I used to do it a whole lot. I also didn't really know better. I didn't really think of this as like water. Like, how do I explain this? You guys know like that glass, like clear plastic maybe container that they'll show you in like a science class, more like a movie, and they fill it with water and the water goes back and forth, right? That's how I think about finding positive expected value in the market. I have to hit it at the crest, not at the trough. And just because I hit it at the crest doesn't mean it's going to necessarily work, but it puts the odds in my favor, even if it's just slightly over a mid and long-term sample size. Which, when I say that, you need to internalize. This is not a, yeah, but Nico. No. This is the fact. That is the only way we make money as day traders. That's it. If you're not able to have the stats of your trading work out in your favor over a mid and long-term sample size, you're fucked. That's the only way. How else would you make consistent revenue, produce consistent revenue in your trading business? You can't. You have to be the house. If the casino had no edge, Vegas would not exist. It would just be a desert rather than the beautiful strip that it is today. It's the same business model, dude. We're operating or at least we're trying to operate as the house. The only difference is our edge is not built into our game, and our only job, like the casino, is to just increase the sample size. Our job is to maintain that edge and increase the sample size. It's a little different. The business model really of a casino, casinos are more so marketing companies, if you think about it. Because the edge is built in. They don't have to worry about that. Yes, they spend many millions of dollars on counter surveillance. By the way, we're 50 seconds out of 35. Hesitation here. The casino spends... Am I getting too deep on this, by the way? Is this too heavy for Midas Monday? I hope you guys are following what I'm saying. Yes, casinos spend many millions of dollars on counter surveillance. That's just to maintain their edge in the games, the slots, the table games, etc. But their job, since it's built in and they have all the counter surveillance in place to maintain the edge and protect themselves from cheaters and whatnot who try to break that edge, what's left? If you're a casino, what's left? Dude, get as many people from Nebraska in that door as humanly possible and get them to sit and play as many hands as possible, as quickly as possible, and get them to not stand up. I don't care, dude. Oh, he's playing big hands. He's not even playing basic strategy. He's got a Rolex on his wrist. Or beyond, one of those $250,000 watches that people are into. Which is, cool. I don't know if it's really my thing. I'd rather spend that on something else, but that's great. Bring him a fucking bone-in ribeye right to the table. Anything he needs. Do not let him stand up, big dog. Right? That's the job of a casino. They're a marketing company and they're a hospitality company. As traders, our job is not really that. Our job is to hunt for positive expected value, which is our setups within our context that we need to read constantly on every bar, and then increase the sample size, which is take as many trades that fit that without giving it away as possible. All right, watching 36, baby. 3.5 minutes out. 3.5 minutes out. Sim says, great advice like every day, but of course it feels great when you actually do catch the reversal, so I pay for it on days like this. That's the problem is, do you know how good it feels when you actually catch a reversal? But you know what else is the problem? Unless you're buying a dip and planning to hold it, or you think of yourself, you identify as a swing trader. I'll tell you guys, in the early days when I was going counter trend, because I didn't know what I was doing, and I was just like trying to hit big, and usually, by the way, it's almost like I know traders, right? Usually, you end up swinging big. Why? Because you're chasing losses from earlier in the day, going counter trend probably. So now you're like, okay, one last trade. I'm going to size up and I'm going to catch the bottom. It's going to swing up out of the hole and I'm going to end up big green on the day. And then guess what happens? You get to break even on the day and you fucking flatten because you're terrified. That's not trading. That's not trading. That's fucking gambling. And you're ignoring context, which, by the way, having context as the first tier of everything is the most important thing in my quiver, I promise you. But that's the issue, is it feels real good when you catch it. Doesn't make it a good thing long term. Question, do you stay away from volatile stuff? No, absolutely not. Absolutely not. If I get a tremendous setup and the ATR is 120, I might size down a hair, but I'm still going to hit it. Those trades are great. The more volatile something is, typically the more inefficient, quote unquote, it is as an instrument in that moment, okay? Not in general, in that moment, which is a very good thing. Inefficiencies are great for traders. Chat, what Nico is telling actually is all that happened to me in trading in my 5-year career. Did I just sum it up? Almost like I've been there before. How does he know? How does he know? Does he have a camera in my office? No, I've been there before, big dog. I know. I get it. Every dumb thing you've done, I've done about 20 times. I learned from doing. In the most painful way imaginable, but I'll tell you what, I wouldn't take it back. even though it did hurt bad. All right, 36, rolling over here into bar 37 here, 2 seconds. You see these bulls still having trouble. Holding off on 34, even though I would have done it regardless, seeming to be the right decision here thus far. A lot of hesitation. Again, just because it's a bit outsized bar 34 compared to, especially 32, 33, and really the first bar to meaningfully close outside the range. This is starting to look more and more like a wedge, by the way. As volatility gets, crushed. Look at this. Are you kidding me? I'm going to throw up. That ATR is 28. God. You hate to see it. Okay, so see how this is tightening down? Forming kind of a wedge? That's fine, we'll see. Really all that means is we're seeing a bull grind with a lot of hesitation, which is going to, kill volatility. Doesn't mean it won't come back. Question. Can I ask as a new trader, should I use the 5-minute or the 10-minute time frame? It doesn't matter. I'll tell you something, it doesn't matter. When people ask about what time frame they should use, I tell them this. The faster you go as far as time frame, typically... Now, if you don't know what edge means, what I'm about to say is, not going to make sense. Statistical edge is, if you take 1,000 trades, you end up with a predictable profit. Like the casino ends up with a predictable profit over 1 million hands, right? That's our job as traders, is to acquire that and maintain it as much as humanly possible. And then increase the sample size, which is the amount of trades we take while not giving that away. Okay, so here's the thing with time frames. It doesn't matter for the end goal, but there's nuance to what I just said. The faster you go for time frame, typically on average, the less edge per trade you will have, but the more trades you will get. Okay, so I don't know what we can compare that to. It's a low edge, high frequency table game. And by the way, when I make all these comparisons to a casino, we're not the player. I'm talking about us as the house, okay? If you don't understand that, this is not going to make any sense. But it's a high frequency, meaning we deal quick table game. You're scalping, you have less edge per trade, but you take more trades, so the sample size gets bigger. So you could actually get to the same end goal, if not better. The problem with fast time frames is that you deal with fatigue, whether you realize it or not, much more quickly, and your decision making starts to go downhill without you realizing it. The longer time frame you go, you're going to be even more chilled out, and each individual trade on average is going to have maybe slightly more edge. Doesn't mean they're all going to be winners. If you go to a 1 hour, right, that's not what that means at all, but the sample size of trades that you take is going to be smaller. So less trades, and ideally, if your quality's up there, a little more edge per trade. Again, don't expect to go to a daily chart and win everything you look at. That's not how it works, but that's how the math ends up typically looking for most profitable traders, depending on the time frame they're trading. I say go for a balance. For me, a good balance is the 5-minute. I also like the 2-minute. I could trade a 30-second. I don't really care. A lot of times when volatility is low, a 30-second starts getting really wicky and much more difficult to trade just because it's so wicky and there's not enough data per bar to really make logical, good decisions. Some people like a 15-minute. Maybe someday. I don't know. I think a 5-minute keeps you sharp. A 15-minute puts me to sleep, if I'm being honest with you. Question. Nico, wondering if you have other time frames up on your screens other than the 5-minute? If so, what do you watch on other screens, if you don't mind me asking? Thanks, big dog. I used to. Now, I just watch what's in front of me. I don't really care If I want to look at a 2 minute, I'll look at a 2 minute. And you know what the real answer to that is? Not to sound like whatever, okay? But I'll just tell you the truth. When I look at this, I know what a 2 minute looks like. I know what it's going to look like. I know what a 15 minute's going to look like. I don't really need it pulled up. I know if I want to look at it, I'll look at it and it'll be like, yep, that's what it looks like. I already knew that. And I'll come back to the 5. So I think having 20 time frames up makes you look really fucking sick on TikTok. But it also, like, most traders, unless, and by the way, if it's important for the way that you trade, by all means do it. But I'm trading price action, okay? So if I'm trading a 5 minute, I know what a 15 looks like. I know what a 2 looks like. I don't need it. I'm trading a 5 minute. Okay, and by the way, it's all just different ways to look at the same data. It's not like you're looking at different data. So why do I need that all pulled up? Again, if you need it pulled up for the way you trade, by all means, please do. I did it for a very long time. I just realized over time, I just don't need it. It's just distracting. It's a pain in the fucking ass to get it all pulled up, and I don't need it. So if I want to look at a 2 minute, it's like, okay, look, 2 minute. Yep, exactly what I thought it would look like. Big sideways wiki range, right? Again, I'm not here to tell you my way's right. I just, this is what works for me. News says I need them because my 4 monitor setup is cool. Damn straight, big dog. And hey, by the way, if you're like, yeah, but Nico, I have like 8 monitors and I gotta fill them up with something. Dude, seriously, pull them up. It looks fucking sick. We love it. Like, I will be the first one to tell you to have 20 monitors. The correct amount of monitors, as we know, is always one more. I'm all for it. I love it. But as far as actual trading performance, you're probably not going to look at them. At least, the other time frames. If you're going to have a bunch of other monitors, have a news feed on one. Have your boy pulled up on another. Ideally front and center on the biggest one. Would be nice. I appreciate it. The more monitors you have, the more profitable you'll be. Yeah, I have experienced that. I'll tell you what. You want to have fun with it, dude. If you're not having fun, if someone told you, you only need 1 monitor as a trader, and you're like, okay, I guess I'll only have 1 monitor. I'd love to have 7, but I'll only have 1. Fuck that, dude. Have 17. It's fine. But, like, it's for fun. Like, you're having a good time. It's sick. Your battle station looks awesome. You come in, you sit down, you're like, this is sick. Let me go make $1 million. Then it was a great investment. If it motivates you, each monitor is what, like a few $100? If you want to max them out and make your shit look awesome so when you sit down, you feel like you're in a movie, dude, do it. Please. I'm just telling you that you're probably not going to look at all 17 all day. But that's not the point. It's to look awesome, right? All right, Bears pulling it back into the range. Question, can you tell me what you're looking for? I'm a real beginner. So I'm reading context, and right now my concern, again, tier 1 in my methodology, the way that I trade, what works for me. Big bull trend into potential for a sideways range, right? Don't overthink it, just draw it. It's gonna be crooked, who cares? It's a big sideways range. Attempted breakout on 34, That was very much the early trade, but an outsized bar compared to these. So I hold off on 34 because I'm concerned this is going to happen, getting long, right? I'm concerned this is going to happen, and I only want to get long if 35 is another bull body closing like here, which of course it's not, so I hold off. Now the risk here is that we're going to fade back into the sideways range, which a lot of people would say, so I should get short, right? Well, look at this. We know that the potential for a range is there, but the context is overwhelmingly bullish drift. Okay, so I'm not interested in getting short until there's a meaningful short setup. Ideally, probably more like 3 consecutive clean bear closes, and the third one, the signal body closing within reason as far as size, beneath a wick that to me I look at and I say, yeah, that's a sizable close there. Which, you know, my eye immediately goes to what? The wick low of 24. Okay, especially if it was aggressive. Then I'd be interested in getting short. But then the risk is that we bounce right back up and head right back into this sideways range, which starts to be kind of the problem when you have this sort of thing, because you can attempt upside fade, attempt downside fade, attempt upside fade. And if you take a trade every single time, you might end up, you know, down a whole bunch of money and look back and be like, what the fuck happened? Well, right, that's why I do my best to try to read context. And if I do that twice in a row, I try to step back and say, okay, this is probably a range, right? Before I do it 12 times in a row, which I've certainly done. Doesn't happen so much anymore, but I'll definitely still do it once, twice, maybe 3 times in a row until I look back and say, yeah, this is a big range. But of course, you get more information while you're in the trade, so it's tough to... But that's the issue with these range markets in low volatility, ATR 27. So I'm sorry to dump everything on your plate at once, at least a lot of it. You say you're a beginner, but that's how I believe people learn the best. That's what I would want if I was brand new. Just fucking throw the book at me, I'll figure it out over time. You know what I can't stand? You know what I really fucking hate? When people, they'll say like, hey, like, can you like help me out with this question? I'm new. And they really dumb it down in a way that they're like, ooh, your pea brain can understand this, but it doesn't help anybody because you left too much out. I would rather make you feel overwhelmed and then you're like, oh shit, this is serious. That's why you can make so much money at this. I better step up and take it seriously. And within 4 days, you're like on the same track. Or at least you're understanding now what we're talking about. All right, bar 39. Look at this ATR. Off a cliff. 27 here on the average true range. Again, average true range is the average size in points of a 5-minute bar, and that's based on the last 10 5-minute bars averaged together. So, you know, if you were gonna, you can obviously see I'm flat, so this is for the sake of educating. But if you were gonna twist my arm right now and say, Nico, you have to do something right now, I'd say, well, I'd prefer to wait for more data, and you'd say, well, no, you have to do something. I would have to get long, and, you know, I would prefer to risk the wick low at 25, but it's such a slow grind, the reward to risk isn't really there as far as probability, because I know that this has a reasonable probability of becoming a thing here at some point. Or, you know, you could also say this, whatever, big sideways range. So that's not a tremendous trade. So I would have to probably, you know, this would be a suboptimal trade. I wouldn't actually do this. But if you're like, Nico, you have to do something, I'd have to get long and risk like the wick low at 29. That would be the best thing I could make sense of right now. Still would be more like a C trade. I would take it in eval, but not in a personal or the fundeds. You guys, like, are you guys catching on to how this is very dynamic? This is never black and white. You never want to speak in certainties as a trader because it's going to hurt your image, your self-confidence, I think. Because if you speak in certainties and then you're wrong, all you're going to do is second guess yourself. But if you look at the market and you're like, okay, my job over 1,000 trades is to have a predictable profit, which means the average trade that I take needs to have a even small positive expected value, enough to cover commissions and fees and then leave some profit on top. Some of those trades are going to be losers. Some of them will be winners. Some of them will just happen to end up being around break even, small losers, small winners, depending how I have to manage them. But at the end, if I do logical things within the context and I use logical price action based stops and I don't take profits early, very important, then I will likely have edge and I'll end up with a predictable profit after a big enough sample size. But it's dynamic. There's never a trade where I'm like, there's a 100% certainty I win this. Because what happens if you get long on the most beautiful setup you've ever seen and then Trump tweets? That's that black swan, not really, but we'll call it that, risk that happens that you have anytime you expose yourself to the market. So this is all just sample size. But if you start doing dumb things, if you take one good trade a day and then you're like, okay, all right, great, I'm up 4,000. Now I can have some fun and scalp. Well, if you're scalping, the edge for most scalpers is smaller, much smaller per trade. But then you take more trades. But most scalpers who are beginner scalpers do not have that small edge. They're not maintaining it. So they're actually negative expected values and they end up giving it all back over time. Even if it takes months, they might look at all of their scalps, if they tracked it, next to all of their good trades, and they'd say, holy shit, okay. 3 months later, you're like, I made 80,000 on my good trades, and I lost 95,000 on my scalps. If I was just better at scalping, or in the early days, more than likely just not scalping yet, because you're not there yet, I would have made that amount of money. But instead, I lost 15K. That's what so many traders do this. You're probably taking good trades. You're just drowning it out with garbage. And by the way, I'm not one of those guys that's like, just take one trade a day. That's not what I'm saying. I'm saying every trade you take, even if it's 100 a day, you need to look at and be able to stand by at the end of the day. You know, if you were to take 100 trades in one day, I would give you a margin for error of maybe 3 to 5. You look at and you're like, that was a shitty trade. I shouldn't have taken that. But if 90, 95 plus, you're like, yeah, I'd take that again regardless of outcome. Great. Great. And that gets easier to know, by the way, with track record. By the way, guys, hey, TakeProfitTrader. Fucking right. Code BIG, baby. BIG. 40% off. The activation fee over at Take Profit is $130. You use code BIG at sign up, you're going to get 40% off the rip. And then when you pass that motherfucker, they're going to say, all right, $130. You'll say, whoa, big dog. Take a look at your file. They'll say, my apologies, my good sir, you used code BIG, B-I-G. Please pass on through for free. We're sorry to inconvenience you. We're happy to have you. And you're in a pro account, taking daily payouts. We love it. Bar 40, minute 10 out. You see all this hesitation around these high of days, not unexpected, by the way. We talked about that while 34 was forming, and here we are. Here we are, 6 bars later. Going tight sideways. How many accounts you guys think have been blown through here in totality? Even this little guy here. Probably a bunch, right? Not us, man. Not us, man. Nature, what's up, brother? How we doing? Welcome on in. Okay, we got 4.5 minutes here until bar 41. We'll roll over into 42. Let's see if 41 can get some work done here. A whole bunch of nothing going on bar 40. Damn, man, look at these bulls. They can't get anything done here. Bunch of nothing getting done. That wick high at bar 34. Well, actually, which one's the high of day here? Yeah, just barely the wick high at bar 34, above the wick high at bar 35. Just ahead of 28,850 is high a day. Question, what are you seeing when you look at this price action? Range, range, range with positive drift. Now the problem is, again, if you were going to twist my arm and say, hey, you absolutely have to do something here, I would have to get long, but I need to be able to make sense of my risk. And it wouldn't be the highest grade setup ever. Even range setup. Which is alright, but you know, it's tough. It's tough to structure trades in here. Especially ATR being 27, you know, it's tight. Yeah, man, I mean, it's tough. I mean, this little range here, it's like, it hasn't been there that long. Yeah, it's been 35 minutes, dude. Almost 40 minutes. And really, as far as width, it's only 30 points. It's like, I don't really want to use the wick low of 39 to get long and manage risk. That is so tight. And even right here, it's like to get long here, we're right in the middle of the range. So when things get tight, low volatility in a range, makes our job a lot harder. Doesn't mean you can't make sense of things, but you gotta, you know, have reasonable expectations of the quality of the trades you're putting on in a situation like this. Yeah, you're right. I think we need a poll. Let's run a poll here. You guys ready? By the way, man, if you haven't yet, hit like here on YouTube. We're doing it up. And you're not even hitting the button. Come on, big dog. Hit a button. Hit dislike if you gotta do it. Press something. I appreciate you doing it. Okay. Okay, poll is out. All you guys, please vote. Please vote. I want to see what's up. What's everyone thinking here? Jesus, we got a full-blown mixed bag. Dead even. You guys kidding me? Patrick Big Dog, appreciate you, my man. Good to have you. Chat says, I have no idea what I'm looking at, to be honest. I'm new. That's okay. That's okay. It's all right. Every one of us was new at some point. And if you haven't voted in the poll yet, go ahead, hit it. Go ahead, hit it. Edge says, I remember when RAM looked like some kind of magic. Nope. Nope, it's just what works for me, man. Took me a long time to develop it, but... By the way, I'm not saying RAM is the only way to go. I'm just saying that's what finally got me out of the bullshit cycle that just... I hated it. I hated that cycle. It was awful. But I kept looking at it, I'm like, okay, so what am I gonna do? Quit and go do what I know I don't want to do and then eventually come back and then waste all that time? I guess I'm staying here. And just trying to figure it out, which I'm sure many of you have felt that same way. You're like, okay, so I'm so angry that I just want to stop doing this. Trading is how you're feeling. You're like, but I know I'll end up back here because really the only industries that I'm interested in that offer this kind of potential is basically this one. So I'll go do something that pisses me off even more, and then I will also feel stagnant on top of it, which will make you only feel more depressed. And then you'll end up back here. So rather than going through all that bullshit, and you can just skip that part and stay here. Because you know you're going to end up back anyway, because you're here for a reason. Unless you're, just here as a quick buck artist, then you'll be at every other thing and waste all that time regardless and probably never be back here. ATR down to 25, man. It's slow. It dips below 20. By the way, this red number down here, that's the ATR that I'm talking about. If that dips below 20, our job starts getting tougher, for sure. Even below 30, our job starts getting tougher, as you guys have seen. Below 20, it starts getting even tougher. Below 10, for me, on a 5-minute NQ chart, for context, it's time to walk away. At least during the New York session. It's a little bit different during Asia. But still at 25 here. It's still within reason. Within reason on the average true range. Question, do you ever go off volume? Or is that just kind of an stat? Volume is incredibly important in small market cap instruments. So if you're trading, let's say pre-market, a small cap momentum stock, you know, one of the stocks that has breaking news and pops, you know, 50%, 200%, 500%, one of those pre-market, and you're trading the front side of that move, a lot of the people, because you know that there's going to be algorithms in there, but you know that there's less because there's less. The market cap is smaller, which means that big institutions can't really put enough money to work, so they kind of overlook those opportunities because it's not worth it to them. They just can't put enough money to work. It's too much effort for what they can do. But they're so inefficient because a lot of who you're competing against is honestly gambling humans who buy it and they're like, man, this thing's at $3 a share. I hope this thing goes to $300 a share. And then if you come in and you're just the professional in the room, you can do pretty well. It's very fast. It's highly risky if you don't know what you're doing because these things dump like crazy and get halted, etc. It's a totally different game. But volume is really important in something like that. In Nasdaq, in NQ futures, my comparison to explain the volume difference and why I pay attention in that case and not as much here. Of course, I'm paying attention to ATR, which is sort of a missing, there's a missing piece to it, but it's sort of an indication of volume. At least it can give you an idea. But we've seen high volatility environments even where volume's obviously low, but I can just see that in the chart because it's wicky, it's choppier, quote unquote. But my comparison has always been if you're sailing over a coral reef, a small market cap instrument, you're going to pay a lot of attention and spend a lot of mental capital watching the depth gauge, right? Because if you hit, you know, if you're in 8 feet of water, if you bottom out, you're fucked. So you got to watch the depth gauge. The depth gauge meaning volume in like a small market cap instrument, right? Human-driven instrument, for example, just for example. The Nasdaq is the middle of the Pacific. When you're sailing in the middle of the Pacific, you might glance at it every once in a while, just because that's what you do. But are you spending a third of your mental capital or half of your mental capital managing, watching the depth gauge? Volume? Not particularly. Okay, now that doesn't, again, I'm not telling you the right or wrong way to do it. I don't really care what you do. I hope you just make money. And if you need volume to make money in NQ, then by all means, use fucking volume. For me, I don't. I can just kind of see it. With the way that the ticks move and the volatility of the ATR. The price action. Like, I'm good. I don't need to spend a bunch of mental capital on NQ watching volume. All right, last votes. Get them in. I'm ending the poll here in 30 seconds. The poll in chat. Get your last second votes in. I'm going to end it here. 25 seconds. All right, ended. What do we get? 37% of you guys think it's going higher. 34% of you guys think we're going lower. 29% of you think we're going sideways. Which basically means no one knows. Which is the correct outcome of that poll, by the way. That's not a dig. That's actually a very smart distribution of that sample size that we had in that poll. Which tells me that as a whole, you guys, I think actually in many ways know what we're looking at as a whole. which is the probability here for up, down, sideways. Certainly leans more sideways than you guys put in the poll. But as far as indecision, yeah, we're kind of right there because probability-wise, again, look at bar 35 all the way to 43 here, which is now rolling over into 44. If the market, it goes back to that old saying I'm always talking about. If the market is confused, why the hell would I not be? Right? You know, you always know, see my cursor here? You always know, you already know from looking at the ATR, but you always can tell when it's low volatility when you are moving your cursor and looking at the lows of bars and the highs of bars, and it's very easy to be tick accurate. Because on NQ, when volatility is really high, like you guys have seen, when we have an ATR of 87, I'll be trying to place my stop and I'll be like leaning in to try to get it as close to like a point below the wick low of my signal bar as I can. And I might be give or take a few ticks, but I get it as close as I can because like the look on the chart is so wide because it's so volatile that each little tick is a much smaller percentage of my actual chart. And you always know when you can kind of go tick by tick here, right? It's like, ooh, volatility's getting low, and that's, you see it is. ATR is 23. All right, guys, hey, give me a few minutes. I'm going to give you guys a few minutes here. Make a phone call. I don't want to know who it is. Somebody make a phone call. I will be right back. Don't go anywhere. All right. We got big bar 45. Finally getting something done. By the way, thank you to whoever, you know what, made a phone call. I don't want to know. But we got it moving. That's what matters. Bar 45, closing reasonably. You know, this is the first bar to close outside the range. Sizable bar in comparison to 42 onward. And which means I'm watching 46. We've got 2 minutes, 15 seconds out until bar 46 closes up. I need 46 to actually give me a sign of bull confidence, which means an additional clean closing bull body above the Wikia 45. So let's see if the bulls can put that together. Beautiful. Come on, bulls. By the way, ATR is 23, man. It's real low. These aren't going to be the biggest trades we've seen here. But let's see if I can tack some on top here. Beautiful. Beautiful bulls. We got to maintain this now. We got to maintain this. Bulls have a full minute and 2 seconds to mess this up. Let's hope they don't. By the way, the full range on this bar is like 15 points. Very, very small. All right, here we go. 10 seconds out. Stop limit buy goes out. Place him, roll over. Come on, bulls, take it. Take it. Beautiful placement, by the way. Just beautiful. See if these bulls want it. I only want them if they want it. I'm gonna give it the full 30. Oh, son of a gun. 30 seconds, no fill, no trade. Sorry, gotta pull it. Gotta pull it, that's no fill, man. It's too bad. Man, that sucks. Got a bunch of baby bulls here. Hold up, my shit came unplugged. Let me fix this. There we go. There we go. That is beautiful. Nico, how would you trade a brand new 100K legacy funded account? Well, I'd probably trade 100K, huh? Probably trade anywhere from 3 to 6 micros, depending on volatility. Probably put you right in the slot. Okay. There we go. If it was really high volatility, maybe even 2 micros, probably 3 to 6. 50K is 2 to 5 is sort of the slot. All right, we got bar 47 here. Beautiful bulls. All right, bulls. Give me a nice clean close now. ATR 23, minute 45 out. Let's see what we get. Okay. Okay. 45 seconds out. Get a nice clean close here. Beautiful. Come on, you bulls. Get it done, man. Give me a fill. By the way, low volatility here is never tremendous. ATR 23. Here we go. 10 seconds, copy trader engaged. Stop limit buy goes out. Place it. Bulls roll over. Take it. Take it. 25 seconds. A little less clean than bar 46. But if the Bulls want it, then I want to be a part of it, man. 10 more seconds. Oh, Bills. Bulls, you bunch of babies. Come on now. Pop it! No fill, no trade. All right, watching 48. That's ridiculous. Bunch of babies at the wheel on the bull side. All right, 48, 3 minutes out. Come on, Bulls. Do it to them. Let's go. Beautiful. Beautiful. All right, more than halfway through bar 48 here. We got big bar 50 on the way here, a couple bars out. Now, it's really easy, by the way, when this kind of thing happens where it's a slow grind and you end up, you're looking at this, you're like, man, I should have just bought bar 43. Okay, would you say the same thing about 39? Maybe you would. You'd say you would have held it longer. Would you say the same thing about 36? Look, hindsight doesn't help us. I got over FOMO. I never really struggled with it that much, but I got over FOMO a very long time ago when I looked at the market and I realized, holy shit. By 9:31 a.m. Eastern time every single morning, had you just bought X options contract the previous close, you would have 10x'd your net worth here this morning. Every day you miss that. So FOMO is just a bunch of bullshit. Just because it's in front of your face, I don't care. I just don't really feel it. Now, what I do feel is the frustration when the bulls are being a bunch of babies and not giving me my fills. So let's go. Minute out here, bar 48. See if we can swallow up that top wick. Give me a nice clean close, roll over, pop through the wick high, which is where my stop limit buy will sit. And see. All right, here we go. 25 seconds out. I need these bulls to swallow up a lot of this. Not all of it, but a good chunk of it at least. 15 seconds. 8 seconds. Copy trader engaged. Stop limit buy goes out. Come on, bulls. A little more. That's a 15-second setup for me. The bulls want to pop it within the first 15 seconds of the open of big bar 49 and take my stop limit buy, then I'd like to be a part of it. But they've got to do it quick. 2 seconds! No fill, no trade. Getting teased here. Getting teased. All right, bar 49, what's up? '49 still hasn't taken out the wick high of 48. It's been 53 seconds. Yeah, I mean, look, if you're going to have FOMO from bar 45 onward, you can't pick and choose this shit, dude. Then you also have to have FOMO from the wick low of bar 1. You'll say, man, if only I had a limit order set down here at 28,320. Holy shit, I'd be up how much money? Come on, dude. Why would you do that to yourself? By the way, don't pretend like you would have held it till now, because we both know you wouldn't have. Even if you did have a limit order down here. Okay, so we're a minute 40 out here from the close up of Big 49. Hey, by the way, any of you guys recently max out Take Profit Trader or Apex for the first time, or for the first time in a while, we'll say? Meaning, does anyone have 5 Take Profit Pros? That's an asset, isn't it? Daily payouts in those babies adds up quick. 20 Apex Fundeds. Gotta have 20 Apex Fundeds if you're trying to scale, big dog. The crazy thing about 20 Apex Fundeds, and I know you've all run the numbers, but it's like, let's say you have a 50K account, and let's say you're after the first payout, and now it's payout 2, 3, 4, 5, 6, whatever. It's like, even if you just make the $200 minimum per day, not that you would necessarily just shoot for that, but even if you did, by the end of 5 days, let's assume you just hit 5 base hits in a row, just for the sake of explanation. You have what? $1,000 now in that account available for payout, which isn't even the max payout on any of the second, third, fourth, fifth, etc. payouts, right? On the 50Ks. But you have 20 of them. So you had little base hits 5 days in a row, and now after 5 trading days, you take 20 grand. And now imagine you made a little more than that. Like, it scales to a ridiculous degree. Oh, shit. Place that guy, you know I'm not missing it. Barely closing above the wick high of 48. You see the bulls just barely pull that guy off. You know I'm not missing it. I'm going to give that 20 total seconds. No fill, no trade. Watching Big Bar 50. Let's see what Big Bar 50 can get. But this is why I always say when it's time to make the numbers look a bit bigger, you got to hit Apex 10, 15, 20. Come on, dude. 20 fundeds. But if you need money coming in quickly, I think Take Profit, daily payouts is the way to go. Just because they pay out so damn fast. It's ridiculous. Ridiculous. Once it's approved, you hit the button. It's in your bank literally before you can even open the app. At least that's my experience consistently. It's ridiculous. All right, Big Bar 50 here. 4 minutes. Manuel says, I have 5 Take Profit Trader Fundies. What's next? Go scale at Apex. That's what's next. Come on, 50. See this ATR sucking down 21. Getting teased. On these fills over and over is not surprising when ATR is so low, by the way. All right, chat, question. Could we have waited, or could you have waited longer for the orders to fill? Because it's low ATR with slow bull-up trend. To me, that's sort of backwards for my thinking, because I know that as ATR goes lower and lower and lower and lower and lower, my edge, while not necessarily flipping negative on trades like that at all, also gets a tad lower. Like, I would rather take a continuation. I would take it in both situations if they're both clean. But if you're like, Nico, would you rather take a continuation trade with a 22 ATR or an 82 ATR? Well, given the exact same setup, I'd rather take the 82 ATR. Right? So, no, I would not give it. That to me is the same, like giving it more time when volatility's slow is the same logic as sizing up massively when you're in a trading range. It's sort of backwards. Okay, minute 15 out here from the close up, big bar 50. See these bulls hesitating? By the way, I know it's really easy to, at least those of you guys trading RAM, I know it's really easy to look at 49, 47, 46 and be like, man, maybe I should just use limit orders or market orders instead of stop limit buys. It would have worked, right? Bar 50 here. See this hesitation? This is my concern. It's still, it's been 4.5 minutes. More than that. Still hasn't taken out the wick high at 29. When you start talking to yourself that way, you're falling victim to FOMO and boredom and frustration. You're trying to justify what, maybe I should say, just mark it in. Sure, you could. You can do whatever you want. I don't really care. But should you mark it in? I don't really like the word should. Do whatever you'd like. For me, I'm going to use a stop limit buy, especially when volatility is this low. I don't want to say it's a trust thing, but I just know the hesitation when volatility... Look, ATR's 20, you guys. The edge on that trade, I know, is going to be less than if the ATR was 60, or 40, or 80, or even 35. Nick, how we doing? Seth, big dog, welcome. So for me, it's like you zoom out. We basically have a big bull trend with a couple of sideways ranges mixed in. So I start thinking more and more, all right, well, with the understanding that volatility is low contextually, looking for any reason to get long, I'm into it. But I've got to be able to logically make sense of managing my risk, which gets tougher and tougher and tougher the lower the volatility gets. Okay, so, would I be willing, if we could pull back a bit more, to get long and risk the wick low of 46? Sure, but I would not go as low as what I'd really like to risk, which is the wick low of 43, because the reward to risk is all fucked up. It's way too far away. The volatility is way too low. Question, thoughts on Lucid in between them and Apex? I like Lucid. I don't know, whatever. Pick whatever's best for you, man. But between Lucid and Apex, I mean, they serve different purposes. To me, Lucid is a lot closer to like a TakeProfitTrader. And I've used TakeProfitTrader for so long. I've used all of them. But I'm comfy with TakeProfit. Lucid, of course, I've traded with them as well. Successfully so. But Apex and Lucid, they're kind of different props in my head. Apex to me is like, you go there to make the numbers big. Lucid is like, well, if you're going to trade one account, it's less of a scaling prop in my head. Now, of course, you can scale at any of these props, but like Apex, the 20 account thing is a big deal. But I have really no complaints about Lucid. I like Lucid. By the way, you know, let me clarify something, guys. I think a lot of you guys maybe think like the reason you're not making money is because you're at the wrong prop firm. If you're at one of the big names with a good reputation, well, I guess depending who you ask. If you ask losing traders, they're all going to have a bad reputation. That's not who you need to ask. Obviously. But you go to one of the big dogs, whatever, it doesn't matter, dude. If you can make money at one, you'll be able to make money at basically any of them. But they certainly have different use cases. Which again is why I always encourage a mix of like a take profit and an Apex. Or if you want to go Lucid and Apex or Lucid and take profit, whatever. It's whatever you value. I value speed and scale. So my backbone is going to be take profit and Apex. Because I want a mix of both. Don't pick, just do both. All right, ATR. Does anyone know what I'm about to say? That happened for the first time today. We don't love that, do we? Nobody knows, huh? Nobody knows what just happened for the first time of the day, huh? That's disappointing. Big news, my man. That's right. Average true range just dipped below 20 for the first time today, right here. See this? That's the average range in points of a 5-minute bar here on NQ. That's Nasdaq futures, which is what we're looking at. Dipped below 20 based on the last 10 bars. So 50 minutes. First time of the day. ATR starts dipping below 20, our job starts getting tougher. It's not walk away territory yet. That's beneath 10. But I don't love below 20. Certainly not. Now again, it's been about 20 minutes up here. Watching to see if this tight little range becomes a thing. Honestly, that's about 18 points wide. Very, very tight. Very tight. About 1 ATR wide here on this potential sideways trading range. There you go. A bunch of you guys got it. That's right. Low ATR. So any trades in here would be scalps. So I'm looking again, kind of any reason, any good logical reason to get long, maintaining the understanding that we might just see a sideways range here, so I have to account for that as well. we got about a minute out here. Until bar 52 closes up. Hanging out right in the high end of this potential range from 49 onward. You could say almost from 48 onward. Chat says, I pass evaluations like a breeze and blow PAs like poof. You're probably trading too big. Probably trading too big. You can't rush the payout anyway. Trade smaller. You're getting too excited. Question, does a dipping ATR below a certain point indicate a short-term trend reversal may happen? Not particularly, no. No. One of the biggest mistakes that beginner traders make is trying to pick the top of this. This is a bull trend, okay? But it's a low volatility, very low volatility bull trend now, which makes it a lot tougher. ATR 18.5. You gotta throw that 0.5 in there when it's this low, because that's a meaningful percentage of the overall ATR. Oh man, you know it's slow when you gotta throw in the 0.69. Yeah, so this range here, if you kind of draw it to a reasonable degree, it's about 1 ATR wide, maybe 19, 18, 19, 20 points wide, which, you know, ATR right now, 18.86, which is really tight. That's really tight for a potential sideways range. Yet it's too early to call this an actual developed range, because it's not yet. It's not developed. But we know that it has potential to develop. So for me right now, really the only logical trade that I could take is if we end up pulling back in, maybe this region. I could get long and risk the wick low of 48, but it would be a scalp and it wouldn't be the best quality scalp. And ATR is 18.86, so you know it's, you know, that quality is not great, you know, PA wise, but also, especially I should say, volatility wise, because it is so low. But the risk on it would be so damn small. It's like, all right, toss it in the bucket. Toss it in the bucket. So, by the way, Trump is talking right now. Signing an executive order for military families. I don't know if that's so market relevant, you know. I'll watch 53. See how the close looks around 53. Again, I'm still considering this potential for a sideways range. This would be the early trade. See if they want to grab it. Give that 15 total seconds. And if they don't want it within 15, that's a little too much hesitation for my taste. Ooh, last second! They will take it. Beauty. Check that guy out, huh? See if we can get a full R out of this guy, huh? Which is 11 points. Real tight. Oh, baby. You kidding me? Better than a full ATR. That copier's slow today. All right, flat. And out. Huge trades today. Just a little guy. That's okay. I'll take it, man. I'll take it. I'll take it. In this price action, this volatility, I'll take it. What's up? We asleep? We asleep? I just took the biggest trade of the month. Just kidding. That was actually probably the smallest trade of the month. But I gotta tell you, you know, you gotta remember, I did everything right. I did what I was supposed to do. I executed well, and I booked it. It just so happens that volatility is really low. And you gotta remember, like at one point in your trading career, someday you're going to look at a trade and be like, man, that's small. I don't know. I'm disappointed. That's small. Man, you, however many years ago at that point, would have been fucking pumped to make that amount. So, take it easy. All right, 54 here, a bit outsized, at least as of right now, and that's not in comparison to the ATR. It's in comparison to the most recent, or the more recent bars, I should say. So we talked about 29K. We're 81 points away from 29K. What do you guys think? You think we see 29K here today? Lotus says yes. Manuel says by end of day, yes. Tom says nope. Big News says yup. Well, either way, bar 54 here. Especially in this volatility environment, this price action environment. That's outsized for me. I'll watch 54 do its thing. RX says, I think we get close to 29K, but don't hit it. Maybe stop in the 970 to 995 area. Lotus says 29K on the next 5-minute bar. 80 points. Psycho. All right, we'll see. So they're going to take out the wick high of 54. Hesitate pretty quick. It's all right. Again, 54 a bit outsized in comparison to all the recent bars. And in a high volatility environment, I'd be willing to take that. In a low volatility 18 ATR environment, I'm a lot more hesitant to do so. On a bar that looks like that in comparison to more recent bars. So I wait. ATR creeping up here just a hair, sitting at 19.2. Bull's trying to take us higher here, getting wicked back. Trying to buy that back up. We got 2 minutes here. 2 minutes until 55 closes up. Bar 55. Don't grow that too much more now, bulls. Okay. 36 seconds out. Expanding. We got 54. Now we're getting 55. It's a growing bull body. Is it outsized in comparison to 49 through 53, 48 through 53? Sure, but we had 54 to loosen things up a hair. And it's not so ridiculous. Like, we're not looking at 40 points in range here on this bar. Okay, so it's getting sizable, but I still gotta take it if I can get a fill. Place it. Bulls roll over. See if they want it, and they will. Place my risk. There we go. ATR 19. See what these bulls got. Okay, so ATR right now is 19. ATR is about 30 points. I'm sorry, ATR is 19. R is about 30 points. I gotta tell you, I think I'm gonna go for a full R. I could pull it at an ATR, but on a day like today, as we expand here, for me it's worth taking a slightly lower probability and getting a little more meat off the bone here. And going for that full R. Which again, I will repeat, does what? Improves the reward to risk a bit, decreases slightly that probability. But I'm cool with that here. So let's see what these bulls got. Halfway through bar 56 here. Just about 4 points in the money. All right, bulls, let's expand this volatility, keep it pushing. Whole bunch more work to do than that. Okay. We have 56 rolling over. That for me would be a 15-second setup, which means if the bulls take out the wick high of 56 within the next 3 seconds, I'll have to move my stop below 56, and they won't, which means my stop has to remain as is. Well, we're coming into a full ATR, which I could pull it, but I'm going for a full R here on this trade as my target. All right, bulls. Oh, we don't have all afternoon, man. Let's get this baby pushing. ATR now sitting at 20. So far at best I've been, what, 17 points in the money? Not enough. Not enough. Okay, we got bar 57. Rolling over here to 58. Real slow. ATR sitting at 19.68. Volatility is low. Hopefully these bulls can expand that a bit. Yeah, my target is minimum 1R. So hopefully I won't have to hold this thing all afternoon, man. The sooner the better. Hey man, if you haven't yet, I appreciate you pressing that button. The like button. Or the dislike button, big dog. Here on YouTube. Can we get to 150? Can we get to 150 likes? You know I need some form of dopamine while the market goes sideways while I'm in a trade. You know I do. All right, 256 out here from the close up big bar 58. ATR 20. Oh, you bulls! Bears trying to suck it back. Bull's not getting the job done, man. What a beautiful bar, though. Bar 55. ATR so low, 21, but actually increasing. We were down to, what, 18 at the low here? Yeah, we got 58 rolling over here into 59. We'll see if 59 jerks. on the open here. You can sometimes get a little volatility off the open. And not too much. Not too much. So stop below 55. Bulls at best here have had me, what, 17 points in the money? Again, not enough! So we'll see if the Bears can earn that stop right below 55. That's what I'm going for, man. Hell yeah. Appreciate the feedback. That's exactly on point. That's right. That's right, Bears. You want my stop, you're gonna have to earn it. Oh, shit. Right below bar 55. Do it to me. By the way, ATR is still sitting 21. It is slow. Chat, Royal says, raise the stop or close! Nope. How about I leave it right where it is? Oh, you bulls. Well, as I said, man, we don't have all afternoon for this. So it would be nice if we could get a bit of an influx of volatility and these bulls could come on in and get the job done here. Or I suppose these bears, somebody, man. ATR is actually up 3 points. We're at 18 for the average range here of a 5-minute bar. Now at 21. All right, see if the Bears can take out the wick low of bar 55. I guess the open of 55 is not really a wick, is there? Which is where my stop resides. What you got, Bears? There's the rollover. 59 into big bar, 60. Now, if I wanted to get absolutely crazy with it, I could bet on the range and add. That's more personal account stuff. And you gotta understand that that add would be a very low probability, extremely high reward to risk add. Okay, you gotta understand the math behind something like that, otherwise it just sounds ridiculous. Okay, they will take out the wick low of 55, let my copier get flat. It takes all day for some reason to do so today. And I am flat. Keep it pushing. Bar 60. 415 out. Bears pulling it back. Taking out the open, I should say, of 55. Which leads me to wonder. That is basically the most sustained pull. Pull in, pull back, I guess. That we've seen all day. Which makes me wonder, are we just going to go sideways here ahead of 29K? Gotta love it. All right, we got the Bears stepping in here here on 60. Now, after a huge bullish move, the lower probability thing is that the Bears just A-frame reverse this thing. Could it happen? Of course it could happen. But it's the lower probability thing. More than likely, we end up going sideways. The question is to what degree. Royal says, I warned you, master. First of all, I don't know if I like you calling me that. That's kind of weird. Royal, you're right, brother. I will consult you next time. I'll say, Royal, do you approve of the trade that I'm going to take? You are correct. I will consult you. All right, minute 15 out. It's a little early for me to just say, yeah, blast this guy to the short side. Contextually speaking, it's early. I'm looking at this and I'm thinking, probably going to range sideways again, just how wide. ATR is actually coming up, which is great. 23 on the ATR. Okay, we got bar 60 rolling over to 61. Good bear close. Right at that 20 EMA. Should I pop the scalp? Risk this wick low? $89.25. And we'll see if that they take that out. That's a tremendous reward to risk trade. Low probability. Oops, there you go. Now you can see what the fuck's going on. Yeah, this is a scalp. Not the greatest quality. But that's okay, man. Not all trades are going to be A+, right? I tend to stick to B- and up, by the way, for personals and fundeds. In evals, I mean, you guys know my philosophy on evals. I'll take like D and up because realistically, I'm looking to mitigate opportunity cost the most in evals over anything else. So I'll take lower quality stuff, but I scalp much more aggressively in evals. Again, these are fundeds. Okay, get flat. ATR sitting 22. And we'll see what bar 61 has in store for us here. Holy shit, it's 1:30 already? Goodness! This is where everyone says, man, like clockwork, the 2:30 Eastern reversal. I think it's lower probability. I'll tell you what, if we just got a huge A-frame reversal all the way down, I would be very surprised. But another 2 or 3 bars, and I would get short. But they would need to be clean bare bodies. Joe, any deal running now? Yes, sir. That's right. Take Profit Trader is 40% off, no activation fee with code BIG. Apex, 90% off single day pass. Also with code BIG, B-I-G. Lotus says, I watch the A+ setups. Take the F- ones. My man. My man. So you see what I mean here. Contextually speaking of a huge bull trend, probably some form of range is going to form here. It's just a matter of when. And if it does end up off a cliff, I mean, it'll be so obvious. Yeah, I mean, I could try the scalp again here. The risk is small. But give it another second here, see how this develops. When it starts getting so close to the wick low like this, the probability gets so bad. Well, I should say low, because when I say bad, it implies that it's just bad. Low, with a big reward to risk. And I'm not a big fan of taking it in prop, just because if you take a lot of those trades, there's only so much drawdown to go around in prop. So if you're taking really low probability, really high reward to risk stuff, naturally your losing streaks are going to be longer, right? Right? Makes sense. And there's only so much drawdown to go around. In a big personal account, you can take that stuff because you have plenty of room to go around. All right, we got 44 seconds here until this bar rolls over into 62. So I'll give the scalp another try here. Use this. Again, low probability stuff, high reward to risk stuff. And by the way, if you're like, what is it exactly you're looking at? I'm just betting that this becomes a big range. Because I know that, again, you know, the lowest probability thing right now is not that they take out the wick low of 61. The lowest probability thing is that they just don't A-frame reverse this all the way back. At least not right away. Usually, more often than not, you're going to see some sort of sideways range first. Right after a huge bull push like we got, if it's going to reverse. Oh shit, I keep forgetting to switch this. There we go. All right, ATR sitting 21. See if these bulls can take us back up into that range. Yeah, by the way, unless you understand the math of what I'm doing, I would not just blindly copy me. Because you need to understand that most of the trades, these little scalps, are going to fail. And I know a lot of you guys hate losing. I'm good, because I know the math here. Which is low probability, high reward to risk. Okay. Oh my god, man. This P&L is not moving quick enough. It is such low volatility. ATR 22, bar 62. We are not returning to the upside here, these bulls. Hopefully we get an influx of volatility here into the afternoon. I'm curious to see 62, 63 especially. If 62 were to close like down here, I'd watch 63 if we roll over and close down here. Then I'm thinking about getting short for probably a higher volatility trade, much more like a day trade than a scalp. Right now though, it's just too early for me. trading at 62, rolling over into 63. So ATR is starting to fade again. We're, we were down in the 20s, back to 21 here now. After being back up from 18 to 23, we're now back down to 21. So we'll see if volatility starts to die here again, man. I hope not. I hope not. Joe, no sir, I do not have a Telegram. So, you know, worst case scenario right now from 61, bar 61, 62, 63, we just go sideways in a very tight single bar sideways range. Certainly don't want to see that occur. That would kill volatility even more than it's already been killed. Okay, 60 seconds out till 63 closes up. Okay. Now we'll see if this turns into that single bar sideways range, which you see the bears are seeing, or if we just return back to business as usual here on bar 64. So you have this potential, and of course you have the larger range potential, right? And if you zoom out, full day's context, big bull trend. Which means I can give that scalp one more try here. Volatility, ATR actually creeping back up a hair. But we're still at 23, 24? Man, 24. You love to see 24 when it was just 18. It's not 74. But I'll take 24. There you go, bulls. There you go. Better than a full R. You did flat. Flat, keep it pushing. All right. Little scalps. Now, obviously, you know, the concern with a continuation like that is what we just looked at here. Volatility's so low, and there's potential that we just see this guy turn into a sideways range, right? But then you have the bigger range to look at as well. With continuation here, kind of more toward the middle 10 or 20% of the range. The middle 10 or 20%, right? I'm not that into it. If you removed this wick, I'd be more into it because the risk is so small. It's like, all right, the reward to risk is tremendous. That's fine. The wick on 64, though. I'm just not into it, man. Hey man, if you haven't yet, I really appreciate if you hit the like button here on YouTube. It's free, it takes half a second. And I appreciate it. Yeah, you see the bears here? We roll over, they're trying to take it right back into that sideways range. That's my concern here. Low volatility. Any tight little range that I can see, I start getting a little bit more concerned than I typically would if volatility with this same PA, price action, right, was like 70 or 50 or even 40. But it's 23, bouncing around 20. We were just at 18 on the ATR. Again, that red number down there, ATR stands for average true range. Average range in points of a 5-minute bar based on the last 10 5-minute bars. Again, this is a 5-minute NQ chart. That's Nasdaq futures. Well, all right, guys. Hey, slow Midas Monday, but I enjoyed hanging out with you guys. I will see you back here tomorrow. All right, guys? All right. Hey, have a tremendous afternoon. Please stay patient. Please stay patient. You can take little scalps when they make sense, but you gotta know where to draw the line. That's incredibly important. Okay, don't start slanging scalps that don't make sense. You can dig a hole quickly when you take 24 scalps in a row because you're convincing yourself they make sense when you know they don't really. Okay, and if you have to take 3 back-to-back because they make sense, hit it. Hit it. And if you have to take nothing for an hour and a half, that's fine too. All right, guys? All right. Hey, see you tomorrow. Enjoy your night. Be patient and disciplined this afternoon. If you're going to trade Asia, could you imagine if we have a bigger ATR on Asia session tonight? We might. Take a look at it.